Hello traders, good morning, good afternoon, good evening, bonjour, bonsoir, mes amis, guten Morgen, guten Tag, guten Abend. For those of you who are new to us, we are the CCI Pro Traders, and our website is www.dprotraders.com. The title of the video is Learn to Master the CCI Indicator Step 2. Alright. In this video, we want to learn to master the oversold and overbought commodity channel index indicator, or the CCI indicators. Okay, what is the meaning of the commodity channel index being oversold or overbought? All right, what is the substitute for the CCI being oversold and overbought? All right, this is what we are trying to master. The purpose of this video is to allow traders to focus on one specific aspect of the commodity channel index indicator and to learn and master it once and for all, so we can avoid trading mistakes. What is happening, ladies and gentlemen, is that when the commodity channel index is overbought, all right, most of the traders will try to sell. All right, and when the commodity channel index is oversold, a lot of traders, numerous traders, will try to buy. All right, but it is not always the case. Sometimes the commodity channel index can be oversold, but one can sell. And also when the commodity channel is overbought, one can buy. All right, so by understanding or mastering the oversold and overbought CCI indicator, one will be able to make better decisions, okay, and above all, avoid common trading mistakes. All right, what we care about is to teach traders practical trading tips and tricks that they can put into use, okay, to improve their trading skills. All right, let's get started. Pay attention carefully. All right, so according to the theory, when the commodity channel index reaches the level of 100, positive 100, is considered as overbought. So you see here the commodity channel index reaches the level of 100. Can you read 100 here? It's telling us that the commodity channel itself is overbought. Here it's overbought. Above 100 is overbought. Here again you see 30 here is overbought. It came very close to it, almost overbought. And when the commodity channel index indicator is oversold, which means the indicator dips below the level of minus 100, this is a minus 100 here, okay, D below it here, the commodity channel index is oversold, all right? But there is a big difference between the commodity channel index itself being oversold and the asset itself being oversold. So sometimes what is happening, the commodity channel index itself will be oversold, but the asset or the financial instrument may not be oversold. All right, or the opposite is also true. When the commodity channel is overbought, sometimes the asset or the security itself or the stock or the currency pair itself may not be overbought. We want to be able to filter out, all right, the false signal, or to understand or to master the overbought and oversold, okay, commodity channel index. Few years ago, I have put upon myself to master the commodity channel index indicators, and I have discovered a few things that I've shared with traders before, but we're going to do what we call, okay, a focus analysis of this the commodity channel index. What I have found, okay, is this, okay, whenever the commodity channel is overbought, here I'm using the commodity channel period 22, all right, remember I'm using 22. All right. So when the commodity channel period 22 is overbought, all right, it's telling me that the price is likely to be on the upper end of the Bollinger Band 22 volatility 2. Here you see the Bollinger Band that I have here. You can see here Bollinger Band 22 volatility 2. All right. So when the commodity channel period 22 is overbought, the price is likely, not always, very often, 90% of the time when the commodity period 22 is overbought, the price is likely to be on the upper end of the Bollinger Band period 22. You see here, CCI overbought, the price is very close to the upper band of the Bollinger Band 22. Here again, you can see that the commodity channel stays above the level of 100, is overbought, and the price is also riding along the upper bound of the Bollinger Band 22. All right. Here again, you can see that the commodity channel hit the level of 100, positive 100, and the price is also hitting the upper bound of the Bollinger Band 22. Here again, you can see that the commodity channel index indicator came very close to the level of 100, did not touch it, but you can see that the price also came very close to the upper bound of the Bollinger Band 22. The opposite is also true. You can see that the commodity channel index did below the level of minus 100, negative 100. Okay, here it's oversold. The price is also tagging, okay, the lower bound of the Bollinger Band 22. Here again, the same thing is happening here. Commodity channel tagging the minus 100 level, and the price is also tagging the lower bound of the Bollinger Band 22. Here, the commodity channel D below the level of minus 100, and the price also D below the Bollinger Band, the lower bound of the Bollinger Band 22, volatility 2. Okay, here again, you can see that the commodity channel, you see here, it pulled back very close to the level of negative 100, and the price is also, pay attention, okay, the price is also tagging the lower bound of the Bollinger Band 22. Here you can see that it D below the level of negative 100, and the price is also D below the lower bound of the Bollinger Band 22. There is a correlation between the Bollinger Band 22 and the CCI 22. So the general rule is this. So when we are using the CCI period 14, which is the default setting for many trading software, when the commodity channel period 14 is overbought, the price is also on the upper bound of the Bollinger Band period 14. So the corresponding Bollinger Band has the same, okay, period like the CCI. So when we are using the CCI period 14, we will use the Bollinger Band period 14. If we are using commodity period 20, all right, we will also use the Bollinger Band 20 volatility too. If we are using the CCI indicator period 30, we'll also use, okay, the Bollinger Band 30 volatility too. The common trading mistake that traders are making is this, that, so in fact, when the commodity channel is overbought, it's just telling that the price on the upper bound of the corresponding Bollinger Band, okay? But it does not mean that one should sell. It does not mean that the financial security itself is overbought. The trick that I show traders is that when the commodity channel reaches the level of positive 100, one will draw a warning line, all right? Draw a warning line at the point where the commodity channel crosses above the positive 100 for the first time. So you see here, for the first time, it went above it. So at that point in time, I will just draw my warning line on my chart. This is a trading setup. This will allow me, okay, to manage the risk. So I will use what we call a multiple time frame trading method, or a top-down trading method, or what I like to call a trading drill. Okay, different time frame. This is my trading setup. Then I will use a signal time frame and an entry time frame without ignoring the economy news and the financials. All right, especially if you are swing trading using the commodity channel index indicator, one must always use a top-down trading method, all right, and apply the trading triangle. All right, so here you see again it crosses above the level of 100 for the first time. Here it is for the first time. That's where it crosses for the first time here. Okay, right here I will draw again my warning line. So I'll move my warning line to the point where it crosses above it. Here you see it crosses above it. Pay attention to the vertical line. It crosses above it for the first time. I will draw my warning line above that candle. Here it is. So you can see here it's telling me a lot of traders will be busy selling, but I will not sell because the price breaks above my warning line and the final support. And in fact, the price is in a rising channel. I'm not trading the commodity channel index. I'm using the commodity channels to give me a warning only, but I am trading the price. The price is in a rising channel on a daily chart. We cannot violate the market pattern. We will buy instead, allowing the price to pull back on the edge of the rising channel. Though the commodity channel is overbought, this is a buy signal taking place here. This is a bullish trade setup. All right? You see now? It's very beautiful. So there is a direct correlation between the commodity channel and the Bollinger Band. So when we are using the Bollinger Band, when we are using the commodity period X for X-ray, we will use the corresponding Bollinger Band period X volatility 2. If you are using the commodity period 14, we will use the corresponding Bollinger Band period 14. All right. So the point I want you to understand clearly is that the overbought and oversold commodity channel index correspond to the price being on the upper bound or the lower bound of a corresponding Bollinger Band, which will be equal to the same period like the commodity channel index indicator itself. It makes sense? It is also powerful. So we clarify this once and for all, and we know how to deal with it. So the same thing we will do when the commodity channel index is oversold. At this point in time, you see it crosses below the level of a negative 100 for the first time. You see, very important. What I do, I show you here, my friend. All right, because I want you to master this once and for all. Okay, so here, crosses below, you see the vertical line. All I do, I draw my warning line right there at the point below that candle where you see this candle here, this one here. Am I talking to myself? Let's zoom into it a little bit. So you can see here, so it crosses below the level of negative 100 for the first time. Pay attention to the vertical line. All right, are you watching? Okay, so I'll draw my warning line below that candle. So you see here, it did below it a little bit, but you see, for one day, it went back above it. So you see, this is I draw my warning line, probably went below it, and then return back above it. After this candle here, the green candle, so probably did below my warning line and close back above it. It's turn around. This is what we call turn around. This is a bullish setup here. After this candle, daily candle here, the green one here is closed. This is a bullish trade setup. I will use a top-down trading method to trade it. Okay, it makes sense. It is also powerful. I don't want the video to be too long. So this is learn to master the CCI indicator. Okay, we are talking about how one can master the oversold and overbought commodity channel index. So to summarize this video to traders is that when a commodity channel is oversold, the price is likely to tag also the lower bound of the corresponding Bollinger Band. Okay, where the CCI is overbought, the price is also very often tagging the upper bound of the corresponding Bollinger Bands. Okay, or the upper bound of the corresponding Bollinger Band. All right, we will draw the warning line and we will apply the trading drill, and without ignoring the economy news and the fundamental. We are not trading the commodity channel index itself. We are trading the price. We must not violate the market pattern. Draw your channels and implement a multiple time trading method. It makes sense? It is also powerful. I invite you now to follow me in the next video when I will explain to you again, learn to master, okay, the CCI indicator, step 3. In that video, we'll be talking about overbought and oversold again, but from a different angle. I want to show you something else that you need to know about, okay, the overbought and oversold CCI indicator from a different angle. See you in the next video. By the way, if you like this video, please subscribe to our YouTube channel. If you truly like, give us the thumbs up, okay? If you dislike it, do not forget to give us the thumbs down. But put a comment below. This will allow us to improve our recording. If you are in love with this video, feel free to embed it or share it on Google+, on Twitter, and also on Facebook. Until the next time, enjoy yourself and be very happy. We are the CCI Pro Traders talking about learn to master the CCI indicator, step 2. See you in the next video.